quickly. Today's April 14th. Excuse me. Excuse me. What we're looking at here is, uh, well, this is on a 5-second chart. If we go to the 1 minute chart, I'll just do this replay. Because the market is open. And what we're looking at here is this. It's really simple. Just run up, sideways, boom, come down, and run back up. If we go to the 5-second chart, my 5-second chart, you can go any chart. So long as you can find what we have here, accumulation, manipulation. We have stage, kind of like stage one here, this breakaway gap. Stage two, down boom, taking out this sell side liquidity on a higher time frame. This is also the New York AM open. Notice how we have these relative equal lows here. And also just for the sake of it, this price leg right here. Boom, OTE. Come all the way down here. It's a deep discount. Body's closing 50% of this range. So we have this manipulation leg, first standard deviation is going up. At 1.5, that's we can expect our first retracement. This is kind of like a retracement, but here's a more ideal one. Here we coming back into a fair value gap. Moving up to 2.5 is where we can expect a SMR, smart money reversal. But in this case, we have this fair value gap here supporting. Then we get our terminus at 4. So given that we have our terminus at 4, one of the things we could look at is a order block. Last order block before we hit projection. Notice that we don't have any that goes to 2.5. We can even try this with these two down here. I don't know. Notice we don't have anything that's solid. So since we don't see anything that's solid, sure, we can go to a different time frame. What do we have here? Retracement. Boom, run back up. Here we have a nice order block before a strong move up. What do we notice about a strong move up? Fair value gap, also inverse fair value gap, and 2.5 is where we have our terminus. We do have some fair value gaps down here, even inverse in this volume imbalance. But where should we enter? This is our confirmation. We have this type of setup right here. We also have a 1 5-second chain of state delivery. Where would we return? One may even look at this. This isn't an A plus setup because we don't have this setup right here. We can even return here. Boom. Boom, 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 and boom. Like, oh no. That happens. That's why we want to see this confirmation right here. And if we don't take the trade. We just wait and we mark that down on our Learning PnL, which is something we're going to discuss later. So after we have our bearish shorter block or bullish shorter block projection, now we can measure this low here, this high here, all the way down to 4 standard deviation, where we have our our terminus. That's where we started. Coming down here, we have this price leg here, and we have optical trade entry right here. And within this price leg, you can see it's a stage one, stage two, then boom. Here we find optical trade entry near an area of stage one. All right. This change of state delivery, 5-minute change of state delivery, that's from like a way back, and these were bearish. So here we have one. This will be our retracement leg. 1.5. We get a retracement into this fair value gap, and this is our excuse me, stage one distro. Before we go into that, let's look here. We have a market structure shift here, kind of right off fair value gap. This is inverse, so we're looking at 50% of this thing being respected. and then we come down, officially getting that breaking structure. And then we come up, and one can measure from this side here, from this to here, and OTE. So we have optical trade entry right here. Run up, boom. And these are like what? 2 points. First stage, run down, and then we accumulate on the 1 second. This is drill down. On the 1 second, how does this look? Whenever we see accumulation, just drill down the time frame and look for your AMD setup. Accumulation. Here we have this run down, swing, swing low, and between I think it was like 1.5. Let's look at this really quickly. Oh shucks. I think it's like 1.5 for the swing low projection. No, we need to look this up. I don't know. Anyways, no, let's make this a projection. Yeah. So it was like 1.5 or 2.5. Anyways, we not to look that deep into it. But we do get our manipulation like here, run up, boom, and then we come down. Why am I looking for manipulation to be up here? Because we're still in a down trending market, and this is accumulation on a 1 second time frame. Looking for a manipulation leg, so we can take this low here, this here. Although ideally, since this is the lowest low, we do accumulate, and you kind of want to go from like right here, if not right here, if not right here. Just kind of like a better projection. Since we're just flirting with a couple of points, we can just take the lowest one right here. Okay. And run up. Here's stage two, fair value gap. What do we know about accumulation? Expect the fair value to come. And we can measure this and look where we go to and get our first retracement between 1.5, retracement up, down, terminus 3.5, which lines up with 2.5 of this manipulation leg, experimental reversal, OT of this price leg here. And that's it. So, had we answered in here, how many points was this? 36 points. Not bad at all. What does this look like on the 15? Mm, not much, right? Let's measure this one. 2.5. We don't get that. Let's measure this one. We don't get it. But let's measure. Of course, we know this one. This is on a lower time frame. But just looking at this on a 15-second. Not bad. This is off by 2 points. We do have this little accumulation. We have a chain of stated delivery, right, on a lower time frame. This is a inverse fair value gap. Down, down, down. So that's what this is about. I took a screenshot of it, saved it to the scheduler so we can get rid of this. Here's all this microstructure chain state delivery. Okay. Let's go to the 15. All right, so we identified coming in. This was Thursday. Beautiful day. I got in here for a small little game. Whew, this run up would have been very rewarding. So yeah, this is Thursday, and this is Friday. Coming in on Friday, it's all right. Where are our stages of distribution? We have one here. Let's just give this a different color. And then we have um, another one here. It's kind of like they're all in the same vicinity, right? So we'll just take this one down here. Although we can look at this low right here, and we'll know what this low is. Then we have this low here. So ICT says that we can target these on the way down. Okay. So we have this accumulation. London, we have this manipulation in London. The projection wasn't all that fascinating, although we do come down to force standard deviations right here within this fair value gap. If we look and see where we are, so there's a premium and discount. We're still in the premium. This is a very, very high premium. Excuse me. Very high premium. And I want to say this is stage one. One could say this is stage one right here, but I want to say this is stage one. And this is our quad. And we go up to equilibrium and continue moving down. Perhaps on a lower time frame, we come down, stage one, do 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 do, stage two, do 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 do. After stage two, the expectation is we could get a third leg down, but then we're gonna move up. But we have to stay and give credence to this here. And even if we thought it was gonna go up, the bottom line is, hey, price tells everything. Okay. So we know higher time frame where our pools of objectivity is, right? These green, these yellow bars. Let's go down to the one. This is where we have some fun. What are we looking at now? Accumulation, manipulation, distribution, expansion, or continuation, accumulation, manipulation. So in our manipulation line Q2, we get this run up and we take out the previous highs. I swear that like that's the whole purpose of Q1 accumulation. It's for Q2 to have a run on these highs up here. This isn't Pink Panther. For this to be Pink Panther, we would need to take out these lows here, come down. It looks something like this. Come down, then it come up, then it go all the way down. That's not what we got. We got that in the afternoon session, and I'll be sure to show it. Instead, we just take out these highs up here from Q1. Notice how we have this fair value gap right in here that we run up into. I'm not expecting you to draw out every single fair value gap for your PnL learning or your learning PnL, but you want to meld swing highs and fair value gaps together, right? So we'll take this node down. which is called smart money long and short. And then we have double highs up here. Doesn't this look very familiar to what we were looking at before on the 5 second chart? Ah, interesting. Now, what are we looking for here? We see coming in on the day, it was this huge downturn. It's like, all right, where do we get in? Where do we get in? Where do we get in? It's almost like get in here, you'll be profitable. 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 But those aren't real trades. There needs to be a step-by-step system to what it is that we're doing. So we took down some notes. In a downtrend, in a trending market, you always want to see return to fair value gap OT and initial price leg. Now, where is that located right now? Let's go to the 5. Here we have a price leg from this low up to these highs up here. OT is up here. In addition to OTE, it's also swing highs. So let's also include this in here. Or Q1 high low, or a 90-minute quarter high low. In this case, this is 90-minute quarter high right here. Mark this out. Sell side liquidity or buy side. Whoa, buy side liquidity. In addition to that, instead of measuring this entire range here, we can also measure this range. And of course, we exceed optical trend entry. We actually inverse it here. You're thinking, all right, we inversed it. This must mean we're going to go up. For us to think that we're going to go up, what I'm going to say, something that we're going to work on a little bit later. No, this is not optical trend entry. Let's try. And no, this is not something that I recommend doing. It's constantly trying to find, ooh, fit. Okay. Here we are looking for a return into optical trend entry or a swing high, in this case, swing high, or a quarterly swing high, as well as return to a fair value gap, or it could be a bearish order block, or bearish or bullish order block. In this case, we have our buy side here, buy side liquidity, and we have our bearish order block here. Low, high, lower, low, or one could say, yeah, and we want to take the highest one in this case. Or you could take the entire one. What do you notice? Let's take this one. What do you notice? 50% of it is right here. It's being respected. This is also what you can use to determine if we're still in a bearish market or bull market. And where is this coming from? From this side here. And yeah, go ahead, try it out. See? Way up here in discount or premium. So we have this sort of block here. And we also have these swing highs here. If we go to the 1 minute, this is what it looks like. Boom. Here's a fair value gap right in here. Notice how we take these highs out, and we run right into this fair value gap here. This fair value gap is nested within a bearish order block. See? Bearish for the block, fair value gap. They're all within each other. Take it. This is also a what? 5 minute change instead of delivery. It's all the same thing. Change instead of delivery. Boom. Breaking structure here. This is valid. And I'm not expecting to write out every single one of them, but just get in the habit of interacting with the charts. So that's step one. And step two. Then standard deviation, order block, and retracement leg. Here's our retracement leg. Here is our 5 minute change instead of delivery right here. Oh yeah, 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 yeah. 5 minute change instead of delivery. 2.5, 2, 2.5. It's confluence with what we have here. Oh, for confluence, it says nan standard deviation, order block, and retracement leg 2.5, order block slash change instead of delivery. And retracement leg 2.5 for confluence with OTE fair value gap. On lower time line, this is a mad leg manipulation and may see market maker X minus into OTE fair value gap on a high time frame. Oh, for real? Let's check it out. So this is our order block, right? Bullish for the block or change instead of delivery, right? You can go higher here. Put those right here. And what do we say we want to do? Find manipulation, accumulation, manipulation, distribution. I don't see any manipulation here. But what I do see is accumulation, manipulation, then boom, down. So this order block, change state delivery, can be a manipulation leg, right? Or the order block can be accumulation, excuse me. But look what we have here. Stage one. Notice how we come out of this accumulation, fair value gap, breaking structure here, breaking structure here, breaking structure here, almost all the way up here. We do within this price leg. Fair value gap, stage one, run up, come down, bullish order block, all the way down here is respecting. Stage two, boom, stage three. And what do we do from here? We can measure this one. Ideally, we want 2.5, but this comes all to 3.5, which lines up with what? Boom. Let me add that there. Then SCD order block on same time frame. On low time frame, this is manipulation leg. It can be the manipulation leg. May see market maker, hence LTC. Also can be accumulation followed by expansion leg fair value gap plus fair value gap and marker maker model. Take stage two. Take stage two and STD for 2.5 to 3.5 STD terminus. That's what we have here, right? Here's stage one, here's stage two, last order block. Boom! And what do you notice here? If we take these lows here to these highs here, quad this. All this is happening within the lower quadrant. Let's go back out to the 15. All this was happening stage one, stage two, all was happening within the lower quadrant. That's very, very, very important. This all here to me is a low resistance liquidity run. I mean, it's really gonna run through this. Okay. So I got rid of all of those notes. Are you serious? Are you serious? Are you serious? Oh no. Nah. Oh, here it is. We're looking at the wrong one. Um. Oh shit. All right, let's look at this one. There's a lot of stuff on it, but we'll fare well. I promise we'll fare well. So this is in 1 minute. We have this run up here. Boom, boom, boom. All right, let's get the same time frame at least. This is 7:50 in the morning. This was before I was even up. And then we're also coming up into 8:30 open. 9:30 opens over here. So this is 7:30 in the morning. Friday, 7:30. Yep, so this right here. All right, so let's just finish this off over here. Then we'll go to the other chart. So here's an example. Boom. Then measure manipulation leg on high time frame for standard deviation, lower for 4 standard deviation into higher time frame PD array. All right, so what does that look like? We're on the 5, and we want to measure the manipulation leg on high time frame. We're done with this. We're done with this. This here, this last run up, you can see this as our manipulation leg, right? Projection. Okay, here's 4 standard deviations, and this measures into this 15-minute stage 1 or stage 2 distribution. Here it is. Not only that, but it's the low. Just tell me the low of this quarter. And what do we get? Run down, fair value gap, not really. Run down, run up, run down, accumulation, accumulation, accumulation. How many points is this? Assuming we got it up here. This is 100 points. On the 1 minute, now we want to look for our entry. We have an idea, we have a projection that's telling us what's going on up here. There are too many PD rays going on up here. Now, we measured, we can get rid of this right now. We measured this as our manipulation leg. We can also see this as our manipulation leg. And we did get our fair value gap. Did we get a breaking structure? This swing low here, this fair value gap holding. Yeah, and then you can optical trade entry. This will be kind of like right in here. Very similar to what we saw on that 5-second chart earlier. But then we get ran out. So notice how we get this manipulation run up in the Q2. See that? And it happens. This can very well happen. Assuming we got in. Let's just look at the low from here. This is a 23-point move. Whew, whew, whew. Relative go highs up here. So we went up and tried again. We have no inverse pair of A gaps, which is fine, but we do get one right here. But we want to measure this manipulation leg. I also think we can do is look at this last order block right here. 2.5 is right here. 4 is up here. Actually go to 3.5 of this right here. Get rid of that. So from here down to here, we have 4 standard deviations. Boom. If we go lower, just low right here, boom. Can't make that up. So this is why you need to bounce in between the 1 and the 5. If we go down to the 15, and we look for, you know, this here. This is 1.5. Excuse me, we can look at this one here, Here's 2.5 right here. Boom to the T. And then we said once we do that, then we look for our manipulation leg. Here, look at from here to like right here. And this lines up nicely where we get our first retracement. 1.5. Here's 1, where we get our first retracement. 1 right here. Run up, 830 open, hits it, boom, comes down. 1.5 right here. Here's 4 standard deviations, which lines up kind of nicely. And what do you notice here? From here to here, OTE, up, 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 boom. Optical trade entry. Look how this is being respected. So that's 7:15. So it's like, how do we know that we should stay on the 5 and not need to go down to the 15 or to the 5? Second chart. I don't know. I mean, just look at this -4. We said we want this manipulation to be projected down to a higher time frame PD array. This is a valid target, and this is over like 100 something points. Take it. Two Nasdaq contracts. You don't want $4,000. And our goal is this is our goal. We want to have $500 a day. Multiply that by 5, right? That's $7,500 a week. Let me do this again. I know I'm sidetracked. 500 times 3. We know why. It's being distributed 3 ways, and we need that 5 days, 5 times a week. 75 divided by 1 contract, 375 candles or handles divided by 5 days. It's about 75 handles a day with 1 contract. If we have 2 handles, 2 contracts, that's 37 handles. That's doable. Question is, where on our list can we afford to take out 2 contracts? Is that 10,000? Is that 3,000? 30,000? Or is it 100,000? Choice is yours. Okay. So that's that. Boom. We're done. What else? Measure the man leg. Look for change in state delivery near order block, OT fair value gap, and retracement leg. So here's our retracement leg. Where's our 5-minute change in state delivery right here? Here is our market structure shift right here. Boom. On the lower time frame, run up, took this out here, run up, boom, go down. Look for CLD near order block frame. Look for change state delivery near OT and retracement leg. SD for 1.5 standard deviation. So let's go back to the 5 and 1.5 standard deviation is right here. Not sure why we wanna look for that. Look for change near order block and retracement. We got that. Look for inverse fair value gap after change state delivery and market structure shift. So back on the 1, um, inverse fair value gap here. Here's our inverse right here. Perfect. We didn't get one here. And then we get our market structure shift here. Our 1-minute change state delivery all the way up here. Even coming out this accumulation. Do, 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 do. Same thing. What we see here, same thing. Look. Market structure shift. Although there is no inverse fair value gap, but we do have a fair value gap here. Coming out of it. can extend this down even lower. And then we also have what? 1 minute change of state delivery. CICD. Boom. And then what else do we have? Holy, oh, really? Optical thread entry? Bear shorter block? One here, one here. Really? Is this not a valid entry? Huh? What else? Here's our order block going into it. We can do what? Extend this down. Projection. Here's our 4. 1.5 here. Whatever. Alright? Boom, going down. Here's 4 standard deviations. Look how that lines up with what? 2.5 on the lower time frame. 15. We want to know what? If this, in fact, this run up is in fact going to be the what we want it to be. So 2.5. Take the last one. This one's going to be kind of tricky. Here's 2.5 right here. Here's 2. Take the last order block. Here, let me measure this down just a little bit. See? 2, 2.5. Optical thread entry. You short here. Right here, short there. And then our manipulation leg, which we do here, from that high here down to this low here. Yes, the manipulation leg exceeds this order block. And then we go to the 1 minute. Do, 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 do. Here's 4. Negative 2.5. 1 minute even do this extended all the way down here, but yeah, that's it. So from here to here, there's your 54 handles. And what did you say you needed a day? 75? We just got 50 right there. And you're not going to get down moves like this every day, but Thursday and Friday, even Monday of last week, great trading days. I mean, just look. I know we're not on the right chart, but I'm just saying from like here, if you were to hold, not down here, it's over 200. And you're basing that off of this 15-minute chart up here. This is key market maker model. Key market maker model. And you know this is our terminus. And we almost came down to it. Actually, we did come down to it. Imagine holding from here. There you go, 316. What did we say we needed? 15 times 5 divided by 20. 375. Lo and behold, you just made all your money almost in one haul. 7,500 bucks in one haul. Imagine getting into 10 contracts. Okay. Anyways, so back down to the 5. Boom, down, boom. Stage 1, stage 2, boom. So now what do? Run up here. What do we look for? We want a retracement to get in. And yeah, we can just get in here, but we want to change the state delivery. Like here, boom, change the state delivery. All right, so now what? Measure from here to here. OT, whoa, fib. We want to see it move all the way up to here. But look, we get a 5-minute change state delivery right here. Where can we see this to be extended out to? Projection 2, 2.5 is up here. This is all valid. One, 1.5, we said that would be stage one. Optical track or SMR is here. Smart money reversal is up there. Here we have some relative equal highs up here. So if it's not optical trade entry, I mean we have some relative equal highs up here, sell side or buy side. Good. Also we have this fair value gap right in here. And this is all within what? That 4 hour or that 1 minute or 15 minute. Yeah. And then we also have that 4 hour order block business that we were playing around with. So here we have here fair value gap inefficiency, swing highs. Lines up at 1.5 here. Let's go down to 1 minute. What are we looking for on the 1 minute? Hmm? What are we looking for on the 1 minute? Look at your sheet. And then SCD order block change delivery 2.5. We want to find a 2.5 projection here. One can say look at the last one. No, it's not going to be us. This almost is us right here. Boom. Almost us. Almost us. But no, I don't plan on doing this every single time. Was it this one? Is this one? Is this one? Is this one? Because we won't see this in real time. It's not valid. But what do we know? We have an idea of where price is moving. Look at how the buyers respect this. Also, accumulation, manipulation in Q2, distribution moving up. Stage one, stage two, run up, boom. Now what do we have here? We're looking for a change state delivery on the 5. Here we have this one here. Another one may want to look at that one. 5. Taking those swing highs here after we take out the drawn liquidity. It's another thing. Here's the buy side, which I'm glad you, or sell side, I'm glad you marked this out. Now we're looking for change state delivery after we take out the drawn liquidity. That's what we need to write down. Like that's key. If you have no drawn liquidity, you are the liquidity. Anyways, here we have this 5 matched up with this 1. Take that out here. So we'll just mark this out here. CICD. And then what are we looking for? We want like a manipulation leg. Or not a we want an inverse. This is inversed. But preferably like an inverse. Run up, run down. Or balanced price range as we like to call it. And then what we want? Breaking structure. Right here. Market structure shift. Um, Chase delivery. So we go down to 15. And we go down to whatever time frame we need to go down to get confirmation that this run up is in fact going to be the last run up. And it's going to be like the last order block here at 2.5 into drawn liquidity higher time frame to get that. And here we have our fair value gap here. Boom, respecting. Let's see if we get out to the trade entry on this one. Boom, run up. Fair value gap. It's being respected. Also, let's take this here. Projection. 4 standard deviations. Yep, that's that. But we want to look at this one. Stage two, right? Two points goes to three. So this is a matter of 2 points. Not bad. So you can be on like the 15 and you can see this moving up. You can see it moving up. All right, so as soon as you see a down closing candle going into this, this strong liquidity, go down to the 15 or have it open and look for your last down close candle into this. Look for your 2.5, see where that's at. See how we run up and it's respecting it. Cool. Then we look for change state delivery. Ideally, you want to get it from higher time frame because you're gonna get a lot of them here and shit. You may even get one right here. Two, oh look, two, this is perfect. Change state delivery, this is perfect. Market structure shift right here, this is perfect. I want to run up, out control entry, boom, get smacked. Damn it, I didn't want to lose. I don't want to be late on it. I want to catch it. It's okay. Just be patient. But this is better. Let's go down to the five. Let's look for. Look at this. Look how bodies are. This body's being respected. Here is a fair value up here, which is in first. Run up, second time, and again from this low up to here, 13 points. Secondly, you want to see this, and then you want to get your confirmation with a higher time frame market structure shift. That is key. That's very key. And yeah, you can get away, you can get in early without getting that market structure shift first, but it doesn't hurt to wait, especially knowing that you have a big down closing day, right? So that's it. We just did it again. Coming over here, we're gonna have to clean this up when we're done with it. We were looking at this is a five, this is run up, about to go trade entry. Look at this, boom, boom, come down. This is 11:15, and I'll show you the Pink Panther and all that good stuff. Um, Everything else here is like on a one or below. We're doing some really good work here. Okay. Here's a price leg. Here's optical trade entry. Body's respecting it. Run up. Into this fair value gap. 1 minute chain instead delivery. Boom. So we know what this is here. Now what do we do? Go down to the 15. Why are we going to the 15? To look to see if what we want to change instead delivery, of course, and extend it up. Here's 4 standard deviation. Oh, how convenient. Oh, look at this. Oh, how convenient. I don't know if I got that in there. I got it in the video though. Stage one, accumulation. So this is on the 15. And then what are we looking for now? Accumulation, manipulation, and then we get our distribution. And we're going into where? Optical trade entry. In this case, yes, we are going into optical trade entry. At times we might not. What is this? Sell side, buy side liquidity. What is this? Fair value gap. And this is actually a balanced price range here. But nonetheless, it's a swing high. Take that out. After we take that out, what do we look for next? Change state delivery. What is this? One right here. Followed by what? Inverse fair value gaps, displacement, and what? Market structure shift here. Boom, we got it. We can very well come right back up in here. We can come right all the way back up in here. We Come on in here. Optical trade entry somewhere in here. That's valid. So don't be afraid. But how do we know that this is in fact going to be our price leg? This is a key. Sometimes it's gonna work, sometimes it won't. Take the last order block. 22.5 right here. Lines up perfectly with all this. So it's like your double confirmation. To the point even where you have your higher time frame optical trade entry right here. Boom, take that. Boom, boom. And then we want to project this going downwards, right? And here we have here from here to here, this manipulation leg. All the way down here to 4, right? So let's say we just got in here. Boom. Turtle soup. It's about 75 points. About 75 points. 470. Yeah, about 75 points. Not too shabby. Yeah, no, not too shabby. See that? Stage 1, step 1, OT, fair value gap, swing high, last, change to delivery, lower time frame, extend up, look for 2.5, 4 to be in confluence with what? Premium in this case, PD raise. Next, look for your last stage 2. Look at this, stage 1, stage 2, fair value gap, boom, bullish for the block, boom, respecting. Measure this up. 1, 2, 3, 4, 5, 6. Measure that up. Fair value gas coming out of that. 2.5 right here. Lines up perfectly with that. Chance to delivery right here. Inverse fair value gap here. Go ahead short. Optical trade entry as well. Go down. 1 minute. Oh, where is it at? Where we at? Oh, come on, man. Mm, Jesus, what? Yep. So here's our 1 minute change state delivery right here. Boom, down closing candle. Fair value gap, discount confirmation. Market structure shift right here. Keep on coming down. 5 minute, looking for 5 minute change state delivery. Where's that at? Right here. Look at this. That little whimsy move up that we're looking at was just bullish for the block. I can't tell you how many times we'd be on like the 1 minute looking for, okay, now we're gonna reverse, now we're gonna reverse, now we're gonna reverse, now we're gonna reverse. Only to get caught up in like a minuscule distribution leg on a lower time frame, only for it to just crash all the way down. And here we have the AM session high, low right here being taken out. And in the grand scheme of things, in the grand scheme of things, so we have it's from the morning. Run up, stage 1, stage 2, boom. Right? This is over. This was 4. Now you have a new one. 1, 2, boom, down. There are some other things on here related to just measuring PD arrays and stuff of that nature. I would like to get back to it. It's getting kind of late. I want to go to sleep, but let's see if we can figure something out right here. We're on the 15 second. This is where the majority of the action was taking place. We measure from here to here. Why? It's just a price leg. And we have relative highs up here. Here's your optical trade entry. Boom, look how that's being respected. Here's your 50-second chain of state delivery. Boom, look how that body's being respected right above the optical trade entry. Here's your fair value gap. Oh, look how that fair value gap is being respected. Here's your what? Chain of state delivery on the 15, but looking for 2.5. Oh shit. Launches up. Lines up perfectly with this optical trade entry, and yeah, you guessed it. 15-second chain of state delivery. 4 standard deviations up here, 3.5 is right here. Boom. We can get rid of this. Let's keep that one. Boom. We can get rid of this. Boom. We can get rid of this. And if you want, go on a 5 second. we shouldn't have gotten rid of it. I think it's this one, right? Yeah, it is. Here we have a fair value gap. It's inversed. Ideally, we want to have like a inverse right here, like a fair value gap coming out of it. But we don't have one, so it's fine. Back to the 15-second. Ooh, I have to charge you overtime for this one, buddy. I have to charge you overtime for this one, buddy. All right, let's see if we can do the process again. This is going to become extremely monotonous. Extremely monotonous. And this is our learning PnL that we want to develop. So have a good day. Just want to make sure we're looking at. All right, so yeah, this is here. Measure that up, get rid of that. This fairway gap, get rid of that. This manipulation leg, we want to measure that into a higher time frame order block or PD rate, which is the low of this 4-hour BISI. Yeah, we did that already. We get rid of this. We get rid of these pretty colors. Accumulation, manipulation, distribution, inverse for value gap, change set delivery, market structure shift right here. Oh, what about on a higher time frame? Where's our market structure shift on a higher time frame? Really don't get one. You know, although we do get one right here. Although this ideally would be it here, because you want it on the sell side. Although you want on the buy side. Excuse me, you want on the buy side. This is the buy side. It's just trying to market structure shift right here. Displacement like fair value gap going down. Okay, back to the 15. Do you love me? I do. I do. I do. I do. I'm gonna re-listen to this. I'm like, man, this dude is sharp. He knows what he's talking about. I'm gonna follow him instead of trying to follow the money. All right. Let's take a look at this piece of work here. What do we do? Manipulation leg or swing high down here. And this is one all the way down to this here. Optical trend entry is this green line right here. Although we could take it from right here. This is actually appropriate place. Here's your 6.25 right here. Boom. Um, also this lines up with this fair value gap here. Stage one, breakaway gap here. Boom. Another breakaway gap here. This gets inverse. So now we're moving up. So now what do we do? Oh, maybe we measure our last or first change state delivery on the sell side of the curve. Oh, this one. Where's 2.5 here? Oh, is this 2.5? Which is this right off of OTE, which is about 1.75 points. The high at 2, and our risk is 10. Oh, you gotta be kidding me. You gotta be kidding me. Here it is. Get rid of this. Thank you. Fair value gap right here. You don't see it. Here, I'll show it to you. Boom. Oh, look how the buyers are respecting it. Thank you. Get rid of that. Out to trade entry. Know what that is. Thank you. Now what do we do? Manipulation leg from here to from here to here. Oh, what is this? What you got here, sir? All right, nah, real shit. I do not. What the fuck is this? What is this supposed to be? Auto trade entry. Why do you have this? Why are you mentioning this one? No, we want our manipulation leg, sir. And this looks shitty. Does not look good. Look at this. This looks like accumulation. It's like a AMD accumulation. Maybe this is manipulation and distribution. Let's see real quick. Force down here. You don't say. Before we get another run up. Yep. So yeah, looks to be about right. All right. All right. All right. Back to the 15. Back to the 15. Let's take this seriously. Okay. We got people to help out. Things to do. I want to go to Guadalupe, La Guaticlan. Have fun with my no telling who's gonna be listening to this. Let me just be patient with myself. Um. All right. So what the fuck? We know we this is our manipulation. We know what that projection is. Anyways, this is just like internal within this projection like going down. You know what? This is what I'm supposed to do this. Yeah. So 1.5 is where we see our first retracement, and that's what we have here. Boom, right here. So anticipating that we have our retracement at 1.5, then we just measure this right here. We do, and we see, all right, boom, it goes to 2.5 up here, optical trend entry between this price leg right here, fair value gap. So we're cool. Just you can add here. Okay, that could be your second entry. Um, now why we have this here, I don't know. Get rid of it. Get rid of it. This was like an inverse. Okay, fine. Get rid of it. Oh, I think the reason why we had it was to measure. All right, I see, I see, I see. OT, we don't even get all the way up there. This fair value gap right here, and training set deliver right here. This, yeah, this is all on the 15. Stay on the 15. Stop going down to higher time frame, or up to higher time frame. On 1 sec, excuse me, 1 second, 1 minute, and we just get this. Let's just fair value gap right here. So also might just out on the 1 minute. Like this is a fair value gap on a 1 minute, and just look how we just have, you know, at the top, just bounced. I saw that was doing. Here's the change state delivery. Boom. Market structure shift here. Boom. Fair value gap into market structure shift. Fair value gap. Market structure shift. Fair value gap. Some overlapping market structure shift. Fair value gap to overlap. All right. Then let's go down back to 15. Oh yeah, about this. Yeah. Times 20. It's like my credit card bill. Like making all this. It's my credit card bill. I already know I'm gonna have like 3, 4, 5 accounts. Here is one account. I'm just gonna dedicate to paying off student loan debt, credit card debt. Let's just say credit card utilization like 10,000. Student loans like 46,000. That's 56,000 divided by like 20. That's one handle. That's 2,800 points. Let's do this over, I don't know, 20 trading days. 140 points a day. I don't know, say we just average that by like 70 points a day. Yep, but yeah, that doesn't include taxes and commission fees and potential losses. Got to account for losses. All right, so we can get rid of this. This is the 15. Okay. All right, so I'm confused. Why are we looking at this one? Boom. Yeah. This actually should be up here. All right. I did give you fair warning. I am pretty tired. Let me get rid of that. Let me have this here. All right. One. What is this? Why are you measuring this? What was the point of measuring this? You just hit your higher time frame objectives. No reason to go lower. The thing to go lower. Get rid of that. Here it is right here. Boom. To the fucking T. Stop playing with me. Then we get an accumulation manipulation lane. Boom. Let's just get rid of this. Told you not to do that. Told you, do not do that. Still have some more work to do. Get rid of this. We're done. So now that we hit our terminus, now what? Now what? We're consolidating. And we measure this here. This is probably like on a 5 second. This is all this is here is just a consolidation. Stay out of consolidation. Once we hit our higher time frame objective, just be cool. Get the fuck out. I really don't want to. I really don't care to be going through this. We were looking at this last night to find some type of pattern. It really doesn't matter. Let's go back to the one. Immediately come down here, we get this run out. Ooh, it's this bear short of black right here. Do 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 do. I mean, sure. Look, I mean, this is just one of the things. Whoa, what the hell is that? One of the things you just have to be aware of. Like, hey, where are we gonna go? PD race, PD race. Fair value gap. Here. Boom, boom. Okay, whatever. Still in the 1 minute. This is optical trade entry. Boom. Yep, that's that. From here to here, and this is our manipulation lag, and we want to measure that down at -2, 2.5, which is within optical trade entry of this price lag right here. So we're looking at, that's good. Run back up. This is now a change of state delivery. Be careful. So measure this here. This is where we got caught up in projection down. Oh, nicely. 470 deviations down. And we go to exactly 2.5 for smart fucking money reversal. Get the fuck out of here. Excuse me. This is optical trade entry, by the way. Here, I'll just show you. For the non-believers, he swears a lot. No, I don't. Here it is. Boom, optical trade entry. Fair value gap. Body's kind of respecting it. Run up. This is that 4 minute or 4 hour. Bit C2. Okay, so going long here is valid, but what do you want to know if we're gonna go long? What do you want to know? We want to know something. Yeah, we want to know something. What is it? 15. Okay. Where's our change state delivery on 15? Hmm? Last one, like this one right here. Like this one right here. 2.5 is right here. Boom, we hit that kind of to the T. What? Here's our manipulation lag. Take this manipulation lag here, here, 1.5. Nice. Anyways, you want to take this one here. Boom, hit that. Here's 4. Boom. Here we have a fair value gap. So you know that we're gonna go move. Now we're moving up. Yep. Alright. Right now I'm kinda lost. Sorry, but we went through this already. I mean, at least we were watching a video of it last night going through it. Going through this. So we have a change set delivery here on the 1 as well on the 5. Market structure shift here. SMTs with ES up here. Um, Measure from here to here, all the way down here is 3.5. This is our manipulation leg on the lower time frame. And that's what we go to. All right, boom. Here it is. I'll show you. Yeah, a little run up. Squeak a little run up before we get our market shift. So you got that run out, last run up before market shift here. And change to delivery on the 1 and on 5. Gets us down here. Here. -3, 3.5. Here's our low. Officially come down here. Okay, see that? All this jibber jabber jabber jibber in here. All right, we get rid of this. Let's look for 1. 1 is right here. 1.5 is right here. Then we get a return up. And then I think we're looking at this and this. And here we have optical trade entry right here. Measured from this price leg down. Stage 1, run up. Here's stage 2. Optical trade entry. Boom. Down. But this is kind of arbitrary. This is just a fair value gap we're just looking at. But this price action right here, it isn't something that I would recommend playing around with. This is the fact that we came to the lows, and this is really something that we don't need to look at. But anyways, here we took that official low out. from the lunch low, as well as that terminus from up here. Then we can measure the last manipulation leg, which is this here. Boom, boom. Force standard deviation is up here. At least 3.5 is up here. Yeah, we got that. Yeah. Okay, so question is, why are you measuring this one and not this entire one here? Because we want to measure the manipulation leg into what? Yeah, you got it. All right, draw on liquidity. Let's write that down. Measure man leg into high time frame. Draw on liquidity. Put as a 7. All right, and what do you know? Here's 4. Here's your last order block, right? I changed the delivery. Here's 4. A little bit off. Not too bad, right? Here we have accumulation, manipulation. Don't we get the distribution? No, not really. But let's take this away. Though that is a little slow. Here we have accumulation, manipulation, distribution. Just for the sake of it. Here we have this here. From this low to this high, and we're looking at it. It comes down to optical trade entry. New York AM session. New York afternoon session. Boom, buyers respecting it. Boom, runs up. Also, right here, we have optical trade entry from this high, this high. Almost market structure shift here, but not quite. No fair value gaps. This is very lethargic. No inverses like this here. If you see something like this after coming out optical trade entry, go ahead, take it. Okay. Get rid of this. Get rid of this. So yeah, here's the last one. Force standard deviation is up here. Interesting. Yes, I will show you the pink panther for the afternoon session. Here we have accumulation here, manipulation, distribution. Get rid of this. Get rid of this. Get rid of this. And that 5 second chart we're looking at from earlier today is this price action out here. Okay. As far as a pink panther, we want to see pink panther in this case. It's gonna look something like this. So it's gonna be draw on liquidity, draw on liquidity, take off. So here's stage one or Q1 high. It's taken out here. Then we are targeting the loss on here, which we eventually got. Then after taking those lows out, you want to retarget these sides up here, which we got. Boom. So just like how we got this up here, same difference. Boom, except this is in Q1 of Q1. Boom, took those out. But since we're going down, don't expect us to come down here first, although we could have come down here. Boom, run up, then down. Okay. We accumulate. And look how we go into a new quarterly shift with this fair value gap. Boom, respect, boom, boom. Accumulation. There's no distribution extension, but this is just your market maker model. Stage one, stage two, boom. I believe we measured this already. How do we know this is in fact stage two? Measure from right here. 2.5 to 2.5 is here, but we want to line this up with boom, and look at that, where we got. So yes, this is our pink panther. Ping, boom, boom. Anyways, that's it for me. We're gonna review this recording, and that's how we respond to like trending markets. Other than that, we just have to be very mindful of where we are, where we're going to, um, and just go from there. So this is where we are right now. And if I were to look at this, this is where we opened up at. And we're just consolidating right now. Oh, optical trading entry was the first thing we look for. So say that we're just running up, running up, running up. We need like a change of state delivery for us to be to even like validate this optical trade entry range. Uh, Here we're down here. Bull short black right here. Here we have swing low, swing low. You can see this market structure shift right here. So we get one, two, boom. How do we know this is in fact going to be what we think it's going to be? I'll zoom in. Projection. You seen it live? I'm not making this up. Right here into higher time frame. New York session. Uh, 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 for real. Where can we take this to? Down here. But what do we do now? Uh, let's manipulation leg. Yeah. Right here. Uh-huh. And yeah, right here. Okay. 1.5. That's our first target. Yeah, it kind of lines up. So we're just accumulating right now. Body's respecting. Could go for these highs up here. If we go for these highs up here, boom, boom. Could I be going up for these highs up here? Let's see. We have a chance to delivery right here. Low. Is it? Wait. Do it 2.5. I got the kind of lines up here. Do we have any very gaps? No, we don't. It's all good. Let's go down to the 15. Wait, that was a 5? No, that's impressive. That was a 5? All this is on a 5. Oh, it's very impressive. What we're just looking at was on a 5. 1, 2, 3, 4, 5 kind of run, draw on liquidity, I bet we come down. This is accumulation. Anyways, 0.5 here. This is a 5. Wow, this worked on a 5. So let's go into 1 to get that manipulation leg here. So 2.5 on a 5, manipulation leg on a 1, and let's just take this one. Here's the last one. No fucking way, bro. Fair value gap. Get the fuck out of here, bro. Inburst. What? Breaking structure. Down, back up. Holy fucking shit. And we just die in a quarterly shift. Q3. Boom. So this is what we want to look at. So it's high time frame. This is at like 10:30, 35. High time frame. Bullish block. 2.5 STD. Low time frame. Man. Leg. 3.5 for STD. Oopsies. Alright, so I wasn't planning on showing this to the world today, but let's get this over with. I don't think it's. I'm still needing. I still need to like toy around with this just a little bit. Look what time it is. It's almost 11. I'm tired. 2.5 is here. All right. The other thing I wanted to do was like measure from here to here. This isn't going to be a perfect science, right? Doing after that to get our forced time deviation, which is down here on the 1 minute, what we believe to be our manipulation range from 0 to 2.5, which is right here. Here's 0. This is not a manipulation range, which is why you have to drill down to the lower time frame to find that manipulation, which is going to be always the last leg up, right? And you can use the same logic here. Look at this one. This is at 1.5. Sometimes we can get up to 2, but look, 1.5. Here we have this. No, that's not that. Here's 2.53. Sort of, kind of, but not it. But that's it. We just had two real life situations on the 5 and on the 1, and it worked. And here we are. Look at this strong run up. This is on the 1. We just blew through this with this fair value gap here. All right, so what do you want to look for? We think we took out a draw on liquidity that is at 4. So I don't think this is valid. I don't think this one is valid. Do we have any market structures or like change state delivery? No, we need to see this one. I don't think we're gonna get it. 3, 2, 1. Yeah, we're not gonna get it. 5. We're probably gonna come for these sides up here, or maybe these sides up here. What can we know? What can we do to know? From here to here. Boom, 2.5. Blow through it. 4 maybe? I don't see any fair value gaps, any swing highs that are in confluence with this. So not a high probability trade, and I am done going to sleep. And that's how we do it. Unless until we see our conditions. Give a fuck about that. Alright, so we'll be back in here tomorrow looking at this chart and going in from there. Alright, peace.